$75, let's say worst case scenario, and $75 divided by 5,000 is 1.5%, right? Return on your capital. 1.5% return on your capital. That's nice. That's not nice. That's excellent in a week's time. And if you're winning on this 95% of the time, you're growing your account by 1% week after week after week. And that's the goal. It's nice to All right, so when you're doing the 7 DTE process, it's similar to what we went over with the 1 DTE process this morning on the trading floor. However, we're not going to start with the VIX because this VIX is basically associated with a 0 DTE trade and a 1 DTE trade because it's giving you a 1 day volatility move or percentage move, actually 1 day percentage move that's expected based on the volatility at the time. So this is a 7 DTE trade, so that kind of VIX rule of 16 only applies to the 0 and 1 DTE. But we do look at the straddle price, right? We'll come in here and we'll look at the straddle price. But before even that, we know how much we're going to allocate per contract, right? So we know we're going to allocate 5K per contract, right? So if you do not want to put more than one contract on per every 5K that you allocate to it. So if you want to scale this, right? If you wanted to do 2 contracts, then you need to allocate 10K. If you wanted to do 3 contracts, you need to allocate 15K, 4, 20K, and so forth, right? It'll allow you to stay small, and it'll allow you to be able to adjust this thing and win on almost every situation, right? You're not going to be able to win on every situation. That's why I use the keyword almost every situation. If you learn how to adjust, and we'll talk about some of that adjusting here in just a second, but not in great detail. This is the witching hour, so we're not going to be able to spend a ton of time on it. But I want you to understand the process. We're going to continue to drill this stuff home with the bread and butter, with the long dated, with our safeguard strategy. The strategies that we teach and we talk about in the video library. This is the things you want to learn. All right, but we talk about these 1 DT and the 7 DT trades and the 0 DT trades a lot because you get so many more occurrences when you do them, right? And then we're, in spite of ourselves, all of us like short-term gratification, right? If we can get $1 million today instead of $1 million next week, we will take the $1 million today. I mean, obviously, right? But everything we can get what we want today, we will decide not to do it, a year from now, especially when all else is equal and the only thing that's different is time, right? So, all right. Allocating 5K to it, we jump over to the straddle price, and you can see that the straddle price right now is huge, right? The volatility is spiked up for the 7 DT trade. We have the Fed coming out next Wednesday. We have the unemployment numbers coming out on Friday. So if you were going to do this 7 DT trade, you have the Fed on Wednesday, you have the unemployment on Friday. 2 of the biggest things in my book, right? Those are the things I really worry about, and at this time, inflation. In the past, didn't worry about inflation because it always stayed around 2%, sometimes less than that. But now inflation is one of those things you want to be vigilant about. But next week, you're always going to be vigilant about the Fed announcements, the interest rate decisions when they're meeting, and the unemployment rate when that comes out on usually the first Friday of each month. So this is elevated. This is the one standard deviation move. It's basically 93 points up or down. So we can have some big moves next week. And then if you look at the VIX is obviously telling you we're having 1% moves every day, or we're not. Maybe we won't get it today on the VIX or on the S&P 500. Hopefully that won't be the case. But we've had some decent sized moves. All right, so we want to match that to the TastyTrade platform expected move. So in this case, if this is correct, you can see the TastyTrade platform is kind of jumping around. It was just saying 96, now it's saying 93. So they basically even, right? So that just say 93. We're gonna double this number. We're gonna say 93. We're gonna double that number, and then we're gonna subtract it from here and add it to there, right? So if we take that, that's the same kind of concept we were doing with the 1 DTE trade. So we take that 93 and we times it by 2. That's gonna be 186 points away. So 186. We're gonna take that and add it to this once again, and then subtract it from that. So I'm gonna hit clear here, and I'm gonna take the 41.28, and I'm going to add 186. That's going to put me at the 43.14, and so that would be way over here. 43.14 is, you can just say basically here, right? And then when we're doing the 7 DT trade, it's not like the 1 DT trade. The 7 DT trade, we start with a 10-point wide spread, okay? A 10-point wide spread. So that's not a lot of money right there. That's only what, $30. Oh, I'm looking at I'm all in the wrong things too. You can do this in the ES. That just didn't look right to me. You can do this in the ES, but normally I do this in the SPX. Okay, so let's look at this. Let's look at this with the SPX. It should be very similar. But anyway, so you got to just say 93. So yeah, so very similar. So we're gonna take the 41. We're gonna take the 41.10 plus 186. That's going to take us to 42.96. So about 42.95 is where we're going to be at most likely. So we got the 42.95 here. We're going to do a 10-point wide spread. That's giving us $35 on that side. And then we're going to go over to this put side. And we're going to take the 41.10 and we're going to minus 186, and that's going to take us to 39.24. So we can probably be around the 39.25. And where is that at? That's about right here. That's an 8 delta, and we're going to do a 10-point wide spread. So in this case, we're getting 105. We want to get at least $100 after fees and commissions. So we're super close to that number at this point. So if you have to, you can go as high as a 10 delta on both sides to be able to get your $100 after fees and commissions. If you're super new to this, you can put this further away and be okay with getting less than $100. But once you know how to adjust this trade, you want to get your $100, right? At least after fees and commissions. So in this case, what I would do, even though I think this market is due for have a really kind of take your face off, rip your face off type of rally up, I would move up the call side a little here to be able to get a little bit more than the 105 here. So maybe I'll take this up to this 5 delta, this highest 5 delta, and keep it 10 points wide. That'll give me 130. So that would be the trade. Okay, that would be the trade. And so why is that saying 1370 in buying power? Something is off. Let's see. Something is off. So that's 10 points on the call side. This put side is that's not 10 points wide. See, I didn't look at night. I tell people to look at the strikes, and I didn't look at the strikes for some particular reason. But I double checked afterwards, and what gave me the indication that something was off? Well, this buying power shouldn't have been more than 1,000. It should be actually less than 1,000 if you include the premium, and you include the premium based on the max loss. You take the max loss minus the premium, that would be all. So that gave me a red flag immediately that something was wrong with the trade. Okay, so if I wanted to do this now, I'll take us back to the 8 delta, do this here, do that. So now we're only getting 110, but if we can still get that after fees and commissions, great. I would move the put side up just a little bit more. Once again, I feel like we are, and then this is, once again, that's not 10 points. They're going to make me go up to this 10 delta here, and this is the 10 points there at 120. So 120, 125, something like that. That's what I would do. I would put the put side at the 10 delta and keep that call side where it's at, because I just feel like we can have a pretty substantial roll up. Or you can say, okay, that's the 10 delta. Maybe you keep this at a 9 delta and bring your call side up just a little bit more because we had a 5 delta, right? So maybe you move your call side up to a 7 and you keep it 10 points wide, something like that. That'll give you 140. Maybe that's even better, right? Kind of alchemy of a trade type of concept. You restructure it, figure out the best way to put the trade on for you, or the best way you possibly. Because I believe I can adjust this and be safe on it, I could decide to just go to the 10 delta on both sides and collect a lot more in this case and say volatility is overstated. If the market goes up, volatility is going to come down and we're going to be fine. So this is collecting 150 on this trade. That wouldn't be bad. And if we wanted to collect a little bit more, we can move that put side to a 10 delta. So just move it up to like this. And then we get 160 to 175 potentially on this trade. I like it, but you can be a little bit more conservative. As long as you get $100 after fees and commissions, this works. Once you do that, once you get filled, then what you're going to do is put in your alert. Okay, you're going to put in your alert, and if you're someone that's not going to be able to watch it sometime, and maybe you're not going to have to adjust, you can also put in your profit target of 50%. Right. So if you're getting what you're trying to do is you're trying to collect $50 to $100 for every 5K that you use, right? So going back to that 5K there, if you collect $50 after fees and commissions, you just made 1% off your money. If you collect $100 after fees and commissions, you just made 2% on your money. So obviously we could collect $100 here if we wanted to. If we got 170, we just buy it back for less than, we get out of it for less than $70, and that would give us 100, and that would give us 2%, whatever the case be. Sometimes you might have to adjust it. Maybe you might do a standalone roll up and you get some little bit more credit. That's fine as well. That's how you can get the 2%. But for me, I'm usually trying to hit anywhere between 1% and 2%. So in this case, if you're going to get 50%, let's just say you got filled at 170, you divide that by 2, that's 85 after fees and commissions. Maybe you got $80, $75, let's say, worst case scenario, and $75 divided by 5,000 is 1.5%, right? Return on your capital. 1.5% return on your capital. That's nice. That's not nice. That's excellent in a week's time. And if you're winning on this 95+% of the time, you're growing your account by 1% week after week after week. Okay? That's the goal. It's nice. Let's continue. Once you put on your trade, you can put your profit target of 50%, right? And you can do 55. I'm usually doing 50 to 60%. I'm not trying to get more than that, you guys. This is not a game to stay to expiration. This is not a game to try to get the super majority of a huge amount, 80%, 75, 90%. It's not that game. This game is to be able to get in and out and try to keep the pain or the risk at a very tolerable rate throughout the whole process. Okay? Now, once you put the trade on, you put your order to get out. You can also put an alert, right? And so what I normally do is put the alert 20 points away from the short leg. So this is, and I was talking about that this morning. This is the short leg here, and 20 points away from that would be here. Okay? That's 20 points. So what I would do is just go over here on the TastyTrade platform and put less than, and then I'll put, if it's less than 39.70, then I want to get an alert. Okay, 39.70. And then I'll hit create alert right here. Then I'll do the same thing for this call side here. I'll go over here and I'll put an alert. I want to be 20 points away from where this is trading at right here. So that would be here, the 42.30. And then I would get that alert by going over here and putting greater than 42.30, and then I'll hit create alert, and then I'll get notified on my phone and email if that happens. If it does happen, I'm probably in the lower red zone, and then I can make my adjustment. Okay, I can make my adjustment. So that's how you initially set these up.